Hello, this is Jordan, and this video is being recorded on the evening of Monday, August 19th, 2019. And in this brief video, I'm going to discuss what to do during a correction and what not to do. So starting off, it looks like we're in a correction in precious metals. And as we see here in this chart, we have gold, which peaked out just below my target of 1550. The reason I think we're in a correction and why I say gold is peaked is because the miners usually lead the metals, and especially at turning points. And over the last couple weeks, we've seen a divergence because gold peaked, it looked like a couple trading days ago, whereas GDX and GDXJ, those clearly peaked a couple weeks ago, and there's even been days where gold has been up and the miners have been down. So the miners are telling you that gold is going to come back. Just quickly, just to put context on this video, we're in a correction and we could see a test of these support targets in gold. I have the lines there on the chart, but I think gold is definitely at risk of coming back to the low 1400s, maybe that 1420 to 1425 zone. Maybe it goes a little bit lower. I mean, it remains to be seen. With respect to GDX, it's already corrected some, closed just under 28 today. It has support at 26, very strong support in the 25s. And then for GDXJ, it's trading at about 38.5. Strong support around 35, 36. And there's some support there at maybe in the high 36s. So those are the targets I think we should keep an eye on going forward. Now, first, what should we not do during this correction? Don't hedge your portfolio. Now, I like to do this in years past when we weren't in a bull market, and sometimes I was successful, sometimes not. But okay, first of all, right now, the miners have already corrected a little bit, so it's probably too late to hedge. And secondly, in general, it's difficult to hedge, and it's even more difficult when the primary trend is higher, which looks to be the case now. So we don't want to fight that. Also, selling positions with the intention of buying them back is very difficult. What happens more often than not is you don't buy the stock back soon enough, and after it bottoms and starts to rebound, you end up risking buying it back at a higher price. So now, with respect to positions that you have huge profits on that have gone vertical, there's nothing wrong with trimming those, selling a third or even a half, but just generally speaking, it's not a good practice to sell with the intention of buying it back cheaper because it's difficult to execute that. Now, the things that we should do during this correction, first, we should review the individual positions that we have, and in doing that, focus on the fundamentals. If there's something that's weak and it lacks a real fundamental catalyst or a development, then the stock could go on the chopping block. Because if this correction persists for more than a couple weeks, which I think it will, then those stocks are at risk of correcting more and lagging during the correction. Now, secondly, look for stocks that you did not buy, that you missed before, which have performed well, and keep an eye on those because a correction can give you a second chance at those stocks. And there are a few that I'm looking at. There's one that I mentioned in my last premium update, and it got hit today. So, that leads me to my last point, which is be patient. I mean, corrections and consolidations in precious metals, they can last several months. I mean, this has happened a handful of times in the last 20 years, and even at points in the 70s. You get these really strong moves, and then you get corrections and consolidations, which can last 6, 9 months, even 12 months. I'm not predicting that's going to happen, but it wouldn't surprise me if we had a correction or consolidation that lasted more than 2 or 3 months. So just be patient. You don't have to immediately jump back into something. Just relax. If you have good entry points, just hold what you have. Let the market do its work. And if you missed this run in precious metals over the last couple months, you're probably going to get another opportunity in the months ahead. And so you don't have to buy everything immediately on the first sign of weakness. Okay, so that's all for this video. I hope that this information was helpful for you guys. Please subscribe to my channel on YouTube. If you haven't already, go to thedailygold.com, opt in there at the top. You can get my free book, which contains all the best historical information I have, all the best analysis I've done over the last couple years. And also, you can consider subscribing to my premium newsletter. That's at thedailygold.com/premium. It's very affordable, and I focus on market timing and stock selection in the juniors. If you want to know which juniors really have the goods and the best potential, sign up for our service. It's highly affordable. That's it, guys. Thank you so much for listening and watching this video. I really appreciate it, and I look forward to publishing another video update in the days and weeks ahead.